Hey, is it me or is it just raining today? Raining money! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being at today's webinar here at the Forex.Today YouTube channel. Please subscribe, please like, please comment once if you're watching a recording of this. And also, heads up on Twitter.com/FXBootcamp. When I hit subscribe or when I hit start, a tweet is posted there immediately with a link to this webinar. So if the YouTube alert or notification service is really slow or doesn't work for you at all, go to Twitter.com/FXBootcamp and got that all fixed for you. You'll be notified instantly and given a direct link to the live webinar. And we'll also give you a direct link to the video if you missed the live stuff. So, hey, good to see you. I don't got my computer going. Do you like the haircut? It's a little gray on the sides. A little gray. Yeah. So anyways, hey, let's do some gold, some oil, all that kind of stuff. Do some dollars, some yen, some Swissy, then we're out of here. No webinar tomorrow, no webinar on Friday. Webinar as usual on Monday. Swing traders, I won't be here. Either way, I won't even be here Sunday night. I might be here Sunday night. But then I got another thing Sunday night. As soon as I get back, I got to go do another thing. It's going to get complicated. But anyways, no screen also. You should see my Sav. You should probably see me. You should probably see the sponsor of today's webinar, Traders Way. I am the Chief FX Market Strategist for Traders Way, which means I am charged with the duty of helping you become a success so that when you trade real money in your live account at TradersWay.com, right, that you will survive, not just survive, but thrive for years and years and years and years and years to come. So, they're investing into you today. Even though, let's say, if you're new to these webinars, you might not become a successful trader for 2 or 3 years. They're investing into your success today. So when you become successful, make sure you pay it back. So this is where we left off. Let's get out of high yield. Well, I think the only thing I got going on here is Lira. Same thing. That's where we left off yesterday. Yep. So it's a little better. Cool, a little better than before. Well, I suppose that's the whole point, right? All right, so let's go into here. Good morning to you all. Good morning. We got a request for silver. I did silver last week. I don't trade silver, so I generally try to stay away from it, but I did cover it last week. Yeah, Ian's like, I got a thumbs down for today's webinar before it even started. Yeah, that's cool, right? It's just ignorant. You're the ignorant. You sound like Michael Jackson. That's just ignorant. Anyways, thanks, guys. Oh, Chuck Duck is my hair silver. Yeah. So did you guys see that video from 10 years ago when I'm in the Burj Al Arab? And I'm like, I don't have one gray hair. And that was just 10 years ago. So in 10 years, I went from smoking hot to like decrepit old man. That's how it goes. That's how it goes. All right. So anyways, gold down, down. But check this out. So we'll zoom in a little bit. Look at it kick off the median, huh? That's cool, huh? Median. By the way, I just got my YouTube notification just now. Paching, paching. So if you do the Twitter thing, I have it open, don't I? Yeah. So if you do the Twitter thing, let's see, probably have to. I don't have a Twitter app. Yeah. So look, it's already been. The link to today's webinar has already been posted. Ta-da! How nice. Okay. And then here, if you missed it, I posted my hotel room in the most expensive hotel in the world. Okay. Anyways, check that out. Right off the median. Boop, boop, boop. So there is a channel going. It's still bearish, no matter how high. As long as it's below this blue line, it's bearish. So you can sort of, I mean, I still prefer horizontal support and resistance. Always have, because any kind of channel, I consider them as guidelines. I consider them as suggestions. Typically, if I'm trading a channel, I consider the upper part of the channel primary and the bottom part of the channel secondary. And then generally I don't use the median. In this case, we're doing regression, so we're measuring basically standard deviation. So it's bearish is all I'm saying, but it's less bearish than it used to be because it's in the upper part. Okay. But whatever. It's still a downtrend, technically speaking. Now, fundamentally, it may not be, but technically, that's where we are in that whole thing. Do you need to make a trade here? Is this a trade? Well, depends. So if you're just using a channel to, I don't know, tell you about buying or selling, you're not using channels properly. The second part of what I want to point out is this. If you're treating this as support, this is much better than, I don't know, paying attention to a channel. Okay? So then the next part of this process of setting up a trade plan is the higher high, higher low scenario. So that's the only way of really playing it as triple bottom, 1, 2, 3. And in that case, you're still just going to target this area anyways, because it's still technically bearish. So you're just moving from the median to a point of regression. Okay. So, right now, if you're a bull and it does this up into this level, then you have permission for that, versus the first one is more like this. Okay. The thing is, I never plan on it breaking. I always assume it's support or resistance will hold. Let me say that again. I always assume support and resistance will hold. So as far as I'm concerned, technically, we're going to stay in this downward trend forever. Okay? Absolutely forever. Now, I know we're not going to stay in it forever, but the assumption in the process of planning is it will stay forever. And what that does is, first of all, it forces you never to bet against the trend. But second of all, you recognize that something unusual has happened when it does, or because it will happen. You just can't assume it's going to happen, but when it does happen, Now you say, aha, that was technically important, and off you go, or vice versa, right? So as far as I'm concerned, if we do make it to this level up in here, it will hold. That will drop price. And if it doesn't, that's going to be technically interesting. Brooke says it's going to accelerate down. Yeah, but your statement is like that of probabilities, right? I bet you can't flip a quarter heads 27 times in a row. So what you're saying is, right, it's going to accelerate down very soon. What you're saying is it's in a downtrend. And that's the whole point of the channel. That's the whole point of the regression. It doesn't put you into a trade. It says, hey, we're in a downtrend. Okay? And what do these lines suggest? I mean, this goes back, I'm assuming, and I'm not talking to just Brooke specifically, but to everybody in general. We've been analyzing this for days and weeks, right? So the reason there's a gray area here is technically that's a place to sell, right? So Brooke might be doing this. I don't know what Brooke's doing, but Brooke might have this plan here where there's a move like this, okay? What I would like to point out is that this and this and this are better trades than this. Because this last one, we'll call this A, B, C, and we'll call this D, I guess. Point D is too close to the mean. Okay? Brooke says it'll accelerate. What is probably more likely is that, we're in a scenario like this, and we're gunning for this lower blue line. Okay? But I can't confirm or deny Brooke's plan. But I can back out here and, Okay. Okay. Weekly double top and all that. Yeah, well, I'm only analyzing the trend here. This is for strategy, right? So as a strategist, I worry, if I was a bear and doing strategy, I'd worry about this bounce here because it looks like there's more than a reasonable chance that it does that. And that's why I said this trade in the middle is less ideal than trading at the extremes. Okay? We're not in the mean, right? So the math would say, like, let's say this is, I think this is 2 standard deviations. So there's 2 standard deviations, right? Or as you're probably thinking, you mean the square of the covariance. But anyways, enough of that, right? So when you're 2 standard deviations from the mean, what it's suggesting is price is overbought and has a tendency to revert. What does revert mean in the English language? It means go back to the previous state. And the previous state is average. Okay? So you can say, whoa, we're way oversold. It's going to go more to average. Oh, we're way oversold. It's more likely to be at average. Now you can see sometimes average means goes all the way the other way. That's fine, but on average, this is the average price. Okay? We're way overpriced, way overpriced, way overpriced. We're way underpriced or way undervalued, way undervalued. So now, with that sort of thought process, what about here? Are we way overbought or way oversold? It's neither. So I don't really know what to do. Remember, I start strategy first. So Brooke says, yeah, we'll double top on the blah, 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 blah. Yeah, well, I'm not, right? I may not be interested in that information. Why would I care about a reversal pattern at fair price? Wouldn't I care more about a reversal pattern at extreme prices? Okay, so that's my point. Strategically speaking, I'm not interested in even looking for a double top until I know I'm in a situation where a double top would be most important. Okay. Now, you can trade the heck out of this today, but you might get unlucky, and you'll say, gold, dang it, it didn't do what I wanted it to do. Oh, Brooke, well, all right, so how about this? Let's have like a standing rule. If I'm talking gold, don't bring up other currency pairs and stuff. Because I try to follow the chat, and someone, 2 weeks ago was really bitching and complaining that I never answer their questions. So I'm trying my best to follow the chat and analyze the charts and maybe say something intelligent. So I can't go back and forth if you're managing your own conversation during the webinar and I'm trying to manage mine. I can't do it, man. So can we kind of do that? If we have gold, let's talk about gold. Okay? I mean, you're a major contributor to these daily webinars, so I'm not slapping you. I'm just like, let's kind of have an unwritten rule. Let's stay focused, because I can't do it, right? Oh, well then, again, I apologize, bro. But Euro Czar, or Euro Kiwi. Jorge. Let's go here. Okay, this stuff's much more interesting. This is a leading indicator. Okay, this is a macro indicator. Okay. Yeah, most of them do have them, Seb, but not all. I apologize. Can you see that? Now, the problem with this setup, well, it's not a problem. I guess I shouldn't say that. The interesting thing is we're not kicking off any particular weekly pivot. This was this week's sell zone. That's why I have this drawn. Okay, so I don't know if it was during the full webinar or for swing traders. I don't remember, but the general plan here was this. But it didn't do that. So is there anything else important going on that we might see here? We're on the wrong time frame. This is a bigger move. Okay. Okay. So, when have I taught you? Well, let's change this. About 12 years ago, we did, 12, 10, 12. Yeah, probably 12 years ago, so it's been a while. FX Bootcamp conducted 50 years worth of research. And we researched oil inventory levels. Does anyone know over the course of those 50 years when peak oil inventories for the year occurs? It's just in the standard tools. I think it's under channels. Where is the regression tool? I think it's insert tools, channels. June 1st. June 1st on average over 50 years. Okay? Hey, a lot of things have changed over 50 years, but after 50 years worth of data, it's June 1st, right? So we know somewhere, and you know, it's not a pinpoint, right? So we know somewhere between, let's say, May and July. So now we're doing a bell curve, right? So now we're doing statistics again. Okay? So we'll call this June 1. Okay, but sometimes it's May, and sometimes it's closer to July, and then very rarely is it before, and very rarely is it after. Okay. Okay, and so in this case, we had a bit of an earlier peak, is what it looks like, or at least, gee whiz. Or at least the market is pricing in the move, right? So check this out, right at the very beginning of May. Okay, now we're heading into June, and it still looks like this, which is fine. Now here's the thing. I don't think oil's going to fall forever, but that's my bias. That's my point of view. Now, is it going to fall all the way down to make a double bottom here? 40 something? Well, I mean, it could do anything, right? So that would be very bad. And we're having some pretty bad moves in the bond market, sort of like in the last 24 hours, but also in the last 6 months. So 6 months ago, the 10-year T-note was paying like 3.2%. Which is very healthy, and it made me feel very good and happy, the 3.2 on the 10-year. Now we're at 2.2 again, and we move from like 2.6 to 2.5 to 2.4 to 2.3 to 2.2 very quickly. And we'll probably go all the way back to 2.0, maybe even lower than 2.0, which means there's a huge move to safety, and this is all very bad. So when the 10-year T-note goes up, this is the actual note, 10-year, okay? When the 10-year sovereign goes up, the yield comes down, okay? And oil comes down. So it's all very, very bad. Wayne, what does... Well, they don't know anything more than us. I consider Forex probably even smarter than the bond market, right? I think all of this is the consolidation going into summer. Okay, so put it this way, Brooke, when they say the bond market's the smart money, the vast majority of the market, as far as like retirement accounts and money managers and even hedge fund managers, they're all equity traders. Now, hedge fund managers might be long short, but when you look at money managers and retirement accounts and even the average Joe, you know, the dentist buying Amazon.com stock at $1,500 a share, they're all long only equity, and that's it. They buy, then they take profit, and then they buy something else and they take profit. They're not generally short sellers and all that kind of stuff. Nothing very sophisticated going on. Generally, that's considered dumb money. So when they look at the bond market, well, the bond market's much more institutional. And so they're analyzing things. They're actually thinking forward, like, ooh, well, if interest rates go up here, then the value of these bonds will diminish, and therefore the price has to fall and all that kind of stuff. And if the rates aren't going up, then these other things are going to happen. And they're much more in tune with the actual value of money. And more importantly, the future expected value, or the future expected interest rate, which then determines the value. So it's much more mathematical. So the bond market tends to be smarter about these things. But I think a currency trader the bare minimum needs to be smart, if you will, about interest rates and yields and future expectations for economic conditions and future expectations for central bank policy as a bond trader. But then again, we show up to be the best, so we have to be smarter than even them. Okay? All right. So anyways, if this goes down for months and months and months, we're in deep doo-doo. So what I would suggest is pick your lines and wait if you're a bull. Okay. And one of the key aspects of this is, you know, we're going into summer. We know consolidation is likely to happen. And look at these technicals. Like if you traded the technicals, there are trades here, right? And I suppose that's the best thing about being a currency trader is that we can easily make decisions and trade where it's much more difficult, let's say, to sell the stock market. Now, right, if I call up my wealth manager, I'm like, just sell the stock market, they'll say things like, I can't do that. I'm like, no, don't complicate it. Just sell the S&P 500. I can't do that. I'm like, what do you mean you can't do it? All right. A currency trader like, oh, just sell WTI. Boom. Right? Why? Monthly, weekly M3, monthly central pivot after a lower low. So this is right when technically you know it's bearish, right? And then you know this is another place to sell. But what I was saying earlier, and I'm not sure if I finished the thought, this is the big deal. Remember I said we need to look at it on a higher time frame? I don't think I made the actual point, but we're not even looking at weeklies anymore. This is a monthly move. Whoever shorted here shorted the monthly. Not this month, next month. What? Yeah, I know, right? Not this month, next month. Okay? That's the difference between, I think, I don't know, big traders, awesome traders, successful traders, all that kind of stuff. We're not pissing around with today's news and yesterday's news and tomorrow's news. This is next month and it's already done. They've already entered it. It's done. Well, it's not done, but their trade is done. They're not even looking at what's going on this week. So like all the news like, oh, well, Trump tweeted this and the premier of Japan said that and then the Chinese did that and then dude, this has been in play for weeks and weeks and weeks. So what did the smart money do last month? They started selling in here. Then they started selling in here. They're already in June. That's what I keep trying to tell you. Now, do you have to trade like a giant institutional investor? No, but should you catch these things, like catch them or at least notice them? They're like, oh, these son of a guns. They're aggressive here, but that was a clear entry, so we know they're in the market. And they're trying to get their trades in. Why do they want their trades in early? Because by June 15th, they want to go on vacation. Well, Chuck Duck says there seems to be more front running more often than not. But it's also, I've been teaching you this a lot more, let's say in the last year than in previous years. And, you know, you might notice it more, right? The confirmation bias. But what have I been saying lately? If you can't see it on Thursday, you're not going to trade it on Monday. Barry, we spent 15 minutes on gold already today. Enough's enough. Right? All right. Pound. Okay. Nothing going on the monthly here. You know, I don't know how to trade this one. So remember, this is like crazy fundamental move. This is not your normal move. So I don't know. I guess in this case, you do have to stay smaller time frames. Like the bigger cells are way up here. It may not get up there. We may not ever have a setup. So in that case, we know we're out of position. We know how to trade an out of position, right? We know how to trade an out of position trade, right? Swing traders? Yeah, we do. And we know the consequences of trading an out of position move is that, let's say, probably 2 weeks from now, there'll be a counter trend move. So 2 weeks from now, look for pound strength. I know, right? And by the way, you won't find anything on the chart, and you won't find anything in the fundamentals or the news. Then it'll happen, and then people will tell you reasons why it happened. I'm telling you before the reason showed up, and before the technicals have confirmed it, that it's probably going to happen. I know it not by the technicals that are seen, but by the technicals that will be seen later in the road, and then what those technicals mean. And basically, we're looking at a longer-term reversion. Well, to say it differently, it's oversold. So it'll sell for 2 more weeks, and then it'll revert. Now, like a giant, like 1,000-pip reversion or 5-month reversion, no. But let's say back to, were we on this one or pound? We were on pound, right? Back to this price. I can't see that. So it'll fall for 2 weeks, and then it'll rise back up here. So I'll leave that there. So by, we can have fun here. On or, before sorry. It happens when I type. I'm burning money. No, don't burn the money. I'm burning the money. No, don't burn the money, Wayne. Gee whiz. No, Sev, you're completely missing it. So if you don't know how to swing trade, then just take notes and see what happens. No. No. Okay. Guys, let me say this openly. Don't listen to me looking for secret trading signals. I'm not giving you a secret trade signal. I'm pointing out technical analysis. So if that actually happens and you're like, son of a gun, he was right. It fell for 2 weeks and then rallied. It was amazing. Then you should ask, well, how did he know that? Okay, you see what I mean? That's what I'm trying to tell you. That there's enough information on these charts to tell me that. None of this is my opinion. I'm just doing technical analysis. So then you should say, well, then there's something that he's doing that's very useful that I can incorporate into my trading. So what were those things? And so I'm doing a lot of different high-level stuff there. There's a swing trade in there, but it's an out-of-position swing trade that then sets up an out-of-position counter trend back to this and that and the other thing, and plus the timing of this, and then the Fed meeting on June 15th, and all this kind of stuff. And then there is a few pound things coming up news-wise over the next 2 weeks. It's just miraculous how very often it works out just as you would expect. So I'm not giving you a trade signal. I'm saying you should be able to see all of this and incorporate all of this into your trade planning. So if you're like, so you mean I should sell it at the beginning? No, dude. No, I didn't say that. Nor am I going to say that. Okay? So cash, what is the rationale for your pound dollar bounce? Much better question. Thank you, Cash. And it has everything to do with swing trading. If you know how to swing trade, then you already saw all of that in like 1 second. You looked at it, you're like, oh, out of position trade. That'll set up a counter trend. So you'll be short for 2 weeks and you'll be long for 2 weeks. But that's just swing trading. That's it. So if you don't know how to swing trade, it's going to seem magical. Now, the caveat to the whole thing. The British, the good people of Britain, crashing their plane into the ground, probably a bad analogy, but they're doing it on purpose. I mean, they're crashing this ship into the rocks. How about that one? Full steam ahead, right? That was a little too Australian. Full steam ahead, Watson. Anyways, they're crashing their economy into the ground, into the rocks. Nobody really understands why. I don't think they even understand why, but they're on the boat. And you know, the English never turn around for anything, right? So isn't that going to be reflected in the value of the pound? Yeah, probably. So does the Great British Pound have to trade technically right now? It will, very much so, but technicals will be less reliable in a fundamental shift. You understand? So I am trying to employ technical analysis in a fundamental move. It could be very less accurate than in regular markets. Nonetheless, I still have to figure out how to enter and exit my trades, so I wouldn't be shocked at, oops, well, this wasn't supposed to be that fat, but, so let's delete this and then maybe give it a couple of clicks. So I can't even shift next month in here. All right, so I'm just suggesting if I was using technical analysis to analyze the market conditions for my trading, I would assume this, okay, over the next, really even 3 weeks. Is that my opinion? That's not my opinion. That's just technical analysis. But fundamentally speaking, there's no reason why it has to bounce there. If you didn't know how to swing trade, then you would just assume it's going to fall forever. Oops. I think I kicked off the wrong line. So, right. So anyway, okay, that's what it looks like to me, that it's going to probably accelerate and then reverse. But then what? Well, the big move here, you almost have to go weekly at this point, is that, you know, the pound is not as sound as it used to be. It can make a lower low. Okay? So let me try one more way of saying it. This probably will make a lower low. Okay? The Great British Pound could be way down here in the future, right? Lower than this low. But when I use technical analysis, what am I doing? I'm analyzing price and time. At what price do I buy? At what time do I buy? Okay. So, will we make a lower low? I don't know. But if we were going to make a lower low, would it happen in June? Not in June. June. Lower low? Question mark? Not in June. Is that my opinion? No. It's not my opinion. I use technical analysis to analyze price and time for the Great British Pound going back since 2012. Could we make a lower low? Well, the fundamentals today are the same here and are the same here and are the same here. So could it keep falling? Yeah. And in fact, since it's a downtrend, it probably will make a lower low. Great. Will it make a lower low in June? My technical analysis of the Great British Pound says not in June. Okay? That's what technical analysis does, guys. So now you need to make decisions. Okay? But don't say like the charts told you, so to speak. No, you're just doing technical analysis. You're just analyzing. Okay? What an amazing little spot there. Ooh. Can't wait to see what happens there. I guess we'll do yens. Okay, blew through that. We're on our own. Don't know where the market is. Okay, so I described it early in the month. So let's focus on that. What did we talk about early in the month when we were here? I said take profit, be done with it. I said getting below that is very, very, very unusual. Right? This is where you could take the rest of the month off. Well, we're now at the end of the month, and it looks like the next wave is starting. And that might be an interesting thing to take note of as well. I'm sure you're taking notes. So this did nothing for 2 weeks. And I told you that this is a place where you could lose a lot of money and nothing happens. And you say, well, Wayne, all the other yens are falling. Well, great. You should not be in those trades either. The easy trade was done. And then the longer you stayed in this, the higher your risk. Okay. Now, at what point does the market front run the next month? Well, looking at the last week of the month, which is this week, the sell zone was here. Let me clear that. I wanted it here. Okay, and that's too fat. Okay. The sell zone was here and here. So let me ask you, did somebody trade that? Or is that random? So let's do this one, the one they actually took. Okay. That was a pretty easy trade. If you had a trade plan, if you said you wanted to sell the euro yen, you were there when the market opened. I've preached this 10,000 times. Be at the market when the market opens. I don't care if it's Sunday afternoon, 5 p.m., and your buddies are barbecuing. Do your damn job. So if you were a bear, that's it. There it is. There's your trade. Okay? And it may qualify as a monthly front run. Okay? But notice how you could have taken basically 2 weeks off. Okay? Remember, I tell you, you can volunteer to be a docent at a museum. Now this one is gone. And I said, well, technically that's very unusual. And this is the place you're supposed to get out for profit. This is your moo trade. Okay? And you should be wrapping this up because now we got to set up next month and we're way out of position. So this one's complicated. So I don't know. You might be just as well just trading this on a 15-minute chart and just, you're a bear or you're not a bear. And you might actually be doing that. But on a longer-term basis, the technicals are not, it's a fundamental move. I'll leave it at that because I've said it 10,000 times. All right. So here's another example of, this is when I suggested anything lower than that is technically unusual. And on long and why, but by unusual, I mean this might happen 1 out of 8 months, let's say. And when it does happen, it tends not to last very long. So if all you did was sell here, right, which is the easy entry, and you exited here, you remove yourself from volatility and you remain consistent. Does anyone remember that big conversation I probably went on like a half an hour tangent about being a consistent trader? Consist trader in an inconsistent market. You guys remember that? How many people remember that? Went in a big diatribe, probably 2 or 3 times over the course of a week. You need to be a consistent trader in an inconsistent market. Okay? And one of the things I talked about was when you look at someone's 3-year track record, they don't see any of this stuff. They don't see this up and down and sideways. They don't see that maybe you went 2 weeks without a trade. They don't see any of it. What do they see? Your consistent returns. Because you consistently traded strategies and extracted profit, speculative profit, from an inconsistent market. They don't see any of this. They're not looking at the charts. They don't see like, oh, well, you could have been down for a day and then up for 3 days and then down for 5 days. They just see, oh, you shorted, you made money, and you walked away. And then, you're right, they don't even see the gap in trading. They just see, oh, well, she made 5% 1 month and 2% the next month and 4.5% the next month. Then, woo, 7 in September, great. You know, that kind of stuff. That's all they see. Okay? That's all they see. So why trade an inconsistent market when you don't have any tools that will give you consistent trade setups? So the trade plan was sell there, exit here, and then walk away. And look, yeah, you might have missed a couple of days here and a couple of days here. But I'll tell you what, most amateur retail traders are going to lose money like crazy in here. I don't look at that and think, oh man, they would have made so much money. That's where people lose money. Okay? Where you make money is sell here, get out here, and move on. Okay? Okay? I think this was me messing with the new trade planning tool being developed. You guys are still interested in that, right? It says in the morning, sell here and sell here. Oh, it says sell here, but you never got a chance. Right. Sell here, maybe. Sell here, maybe. Sell here, maybe. Sell here, maybe. Right? Of course, your stop's up here. Sell there, your stop's up here. Sell there, your stop's up here. So 1, 2, 3 days in a row. Sell here. Didn't hit the target. Oh, lost. Sell here. Right? Sell here. Sell here. Boom, 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 boom. Profit, 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 loss. Profit, 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 profit. Yeah, cool. You know what? I'm going to pull the plug here. It's a crazy day. I'm not going to get to my kids in bed probably till about 10:30, and then we're up at 4:30 in the morning. Angela's hardcore, man. She ain't going to sleep in. So, hey, thank you for being on my team. Thank you for being a client to Traders Way. If you're new to these webinars, please visit tradersway.com, download a demo account. Once you have the demo account set up, right, or the download, what I meant was MT4. So you set up a demo, then you go in your back office and you can download MT4. You'll also notice in the description below that there's a link where you can download my MT4 chart setup, so you can do that. Also, I want to remind you, let me just get this in one more time, where it goes. No more Twitter. Twitter's gone. Oops. All right, so anyways, twitter.com/FXBootcamp. What it does is it alerts you when I start my webinars, and it'll alert you when videos recordings are posted. So try that, twitter.com/FXBootcamp. And I will see you guys Monday. So peace on earth. May the pips be with you. May our profits be above average. Thank you for being on my team. And when I see you on Monday, I will be a certified expert in macroeconomics, according to Harvard. Cheers.